Hello, everybody, and welcome back to another edition of Anatomy of a Trade. I'm Franz Herr, your co-host, and today I'm joined by another cameo appearance of the head of Wyckoff Analytics and our professor, Roman Bogomazov, who, together with myself, we're going to go through a trade by one of our WTC2 students, Wesley, in a crypto IOTA. So why don't we take a look, Roman, and see what we're dealing with here?
All right. So, Franz, what's your initial thought here on the structure?
Well, it's a little bit. I think we're looking at a trading range, and we don't really have an indication of what the background to this entire trading range is. We're assuming that there was either an uptrend or a downtrend that led into this. And what we've got here is at this point in the trading range, we've got a downtrend that just barely exceeds the support level. And we don't see a real heavy volume signature at this occurrence. We might be led to think that this is a type 3 spring, which doesn't require a whole lot of testing. And as a spring, we can see that it actually fulfills those requirements. It does not commit in a major way below the support. There's only like one, maybe at best 1.5 little commitments below, and then we get a good rally back up, and then we're off and away in a sign of strength rally that takes us up without a whole lot of interruption, a few little reactions along the way, with one when we initially get to the resistance area and then exceed the support area as a sign of strength. So what are you seeing, Roman?
Yeah, I think that, even with limited information that we have, let's just say like we don't know that this is phase C. So what are we seeing here? Are we seeing the initial decline? The character of this decline, still somewhat bullish. Why? Well, look at how the price moves to the downside, right? So we have first leg down, second leg down, third leg down. And we don't have necessarily like big spreads to the downside. I mean, like, look at this up spread, look at this up spreads, look at this up spread. They are the largest spreads on the chart, except for maybe this one right here, which is still somewhat looking average, maybe this one right here, maybe this one. And those are climactic stops into, some intermediate, trading ranges. So, the character of the decline is definitely somewhat bullish. And as Wesley is pointing out, a support area, we're seeing that spring event. Okay, then after that, we're seeing the confirmation by the character, not by the result, but by the character of how the price moves up, that indeed the environment is bullish. And because of this, our trades all should be to the upside and not to the downside. So from this perspective, and I believe that the trade was a buy somewhere here, and I think on the next chart, it's better to discuss the entry itself, but the background was identified correctly. So I don't necessarily have any issues with the analysis of the background.
Great. So here, if you'd like me to make a few comments,
yes.
We see that good behavior after the sign of strength, and we want to see some sort of backing up action that gives whatever supply remains a chance to be absorbed before a further markup occurs. And we see that the entry that Wesley made was a little bit suspect here. It was a bit of an attempted breakout. You'll notice the dotted line that he's got going across. So just sort of an upthrust attempt, a local upthrust attempt at the previous area, the previous high that we're seeing on the chart here, and after that we get a reaction. So what do you make of the entry, Roman? What do you think?
Yeah, this is most definitely not the best entry on the breakout. So usually our entries are going to be, let's say, phase C entries, phase D entries. So phase C entries are going to be, sprints, shakeout, tests, or last point of supports plus a sign of strength bar. Our phase D entries are going to be all related to the backup action. So you want to enter on the reaction at the backup action, or you want the backup to conclude and then you want to buy the breakout of the backup. So this is just like, very short class here on the points of entry. So what is this point of entry for us? This is the conclusion of the sign of strength. This is, our expectation is that as backup is developing, we could have a complex structure or we could have a simple structure, right? So a simple structure would be something like this, where we're going to have a high or low into the end, and then either this entry or this entry or this entry. A more complex structure could be a trading range backup action. And so in there, we're going to have, a much more complex kind of like phase B, phase C type of structure. And then obviously here we are just using our phase C, phase D points of entry that we've identified before. So from this perspective, we're definitely not where we want to be with our entry. And that creates increase of the risk. Just because you don't know exactly how much of the supply is going to come at this point, how deeply that backup action is going to come, especially after just touch of the resistance and not overcoming of that resistance. So the point of entry is obviously off. I would say that, Franz, even with this entry, this could have been a successful trade.
Mm-hmm. Let's talk for a second about the understanding of the backing up action itself, because I think that the solid horizontal heavy black line that goes across to the left there was probably the initial kind of the initial support or resistance level rather of this trading range. And we do see that after this sign of strength rally, there is a slight ability to overcome that, and then pulls back a little bit. And then I think maybe what Wesley was seeing here is that this this breakout through that initial little area might have been the continuation that he was looking for. Mm-hmm. You see what I'm saying there?
Yeah, like this is a sign of strength, and then this is a backup, yes, and then a continuation. Mm-hmm. Well, I think that the problem here is this resistance. So with this resistance, it's going to influence the price action. I mean, like there was some supply that came at this point, so the expectation here is that at least something should show up. Right, so there is an emotional memory at this resistance level, and that's how it's going to play out, at least temporarily. So I would probably, thinking about this, if I'm not in this position, is that let me see how we're going to approach this area based on the past, and would we have some kind of small reaction, and then put your stop buy here. So if it breaks through, you enter. But you enter after some kind of test. Alternatively, let's just say that there are other two ways to go about this trade. So let's just say like we're thinking, okay, here we might encounter the supply, and this would be our sign of strength. So go with your conventional way of thinking about the backing up action. Could we come to the support? We did. So where are my points of entry? Point of entry number 1, point of entry number 2, point of entry number 3, and then point of entry on the actual breakout of the backup action, number 4. So, and here are all of your entries in terms of the backing up action. The third scenario here is that, okay, we've entered here. So my next point would be, where's my stop loss? Because as I said, this could have been a profitable trade. So Franz, where do you think our stop loss should be?
Well, where was the last area where buying appeared? And it would have been just, yeah, right in there. I would say timestamp number 2, probably underneath that reaction. That would be your aggressive stop loss. Underneath,
I'm
yeah,
sorry,
there.
Franz, right here?
Yep, right there.
Yes.
And potentially there, or maybe a catastrophic stop loss would be under that low of number 1. Yeah.
Yeah, I think, you have to give the room, especially in cryptos, everything is just, if this is a long-term trade, like a campaign trade, give it a little bit more room. If this is a short-term trade, like a swing trade, then you have to be a little bit more precise and your stop loss will be, closer. So for instance, if your entry is here, then your stop loss could be aggressively here or here. But if you're entering for the long-term campaign, and especially with an idea that this is a sign of strength, you're going to go into the backup action, give it more room. I would consider this bar to be kind of like the most important bar as it breaks through the resistance that was identified before, right? So a stop loss here would be appropriate, and that would keep you in the position. Just because the nature and the character of this decline and the specifically result into the high low is actually not bearish, it's more bullish. And from there, that would, convince us to stay in the position, and obviously we would be rewarded almost instantly. Franz?
And let's say that that this did occur. There would be opportunities to potentially scale back, and this is a crypto, so it is definitely pretty frenetic. But you could scale back because you've got this really, really large in early September, this really large, if this is a longer term trade, and if you've got good cause back to the left, which we're not really seeing, but potentially being in this trade from 93 cents to over $2 potentially would be definitely well worthwhile.
And you could even, like, with limited information that we have, you could define some targets. So for instance, by measured one-to-one move, right? So you take the sign of strength and you say, like, at least at the minimum, I have to have the same type of move. So that is the convincing strategy for you to have this higher target, not to exit somewhere here. And that is the beauty of the cause and effect. It gives you that convincing strategy to stay in the trend, to stay in the trade, and make sure that you are not getting earlier out. And obviously, this is a reaccumulation. And again, you see in more supply here, and actually not more supply, but more ability of the kind of like diminishing momentum here on the demand on this rally to go down. But where does it go? I mean, like, we need to intrude into this area in order for us to say that there is not just the change of behavior, but the change of behavior that is going to be changing the structure of the uptrend. And we don't have that. We're stopping exactly at the points that we need to stop. And then after that, good rally, less result even more. And then right here is our points of entry again.
And one of the things that you point out about apex formations is that at the end of apex formations, as volume has just literally gone to nothing, you're going to get a big move. And here, the probability is that the big move is going to be to the upside, and it certainly is.
Yeah, and one of the things, I mean, like, I'm trading cryptos right now. Alessia got me into this. By the way, guys, check out our Discord, crypto Discord. We do the weekly discussions there. Alessio is like every day on the Discord and answering questions and so on and so forth. So some of the cryptos assets like this reminds me of low liquidity stocks. And the way how you identify your selection on the points of entry is out of the inactivity, which is very common in cryptos. You come to the point where result is increasing and effort is increasing significantly. So that's your timing for getting back into this asset. So this would be a really good swing trade up to this bar, the change of character bar. And look how beautiful this trade is. All right, well, let's go through the post analysis front. So what would we do here?
Well, I think he got the bias right, so I give him a yes on that. Do you agree?
Yes.
The timing was a little bit off, although he did recognize the backing up action, sign of strength, and so on and so forth. But maybe a 50-50 on that, Roman.
Okay.
The character is definitely yes. Cryptos are going to move aggressively. The point of entry, what do you think there?
Yeah, I probably would say no. It's just we're entering right at the top of the sign of strength rally.
Mm-hmm. Okay, his stop loss, he did have a stop loss, I think, in place, assuming that's what kicked him out of the trade, but the positioning wasn't optimal, so maybe a 50-50 on that. No add-ons, and the exit, no. So we've got 1, 2, 3 out of 6, 50%. Yeah. So comments and lessons, I think, we all of us as students, the first thing we're drawn to is the structure that we see in an accumulation, and we are, it's sort of, it's like a moth to a flame. We see this structure and we think, okay, well, this is a backing up action. I want to be buying it. But there's a little bit more, we've got to be cognizant of the entire setup, the context that it's occurring in, and the kind of the price and volume behavior and where it's occurring and what should be happening at this particular point. So that would be one comment that I would make. What do you think, Roman?
Yeah, I think this is kind of like the most significant mistake here. So Wesley, one of the things is just to go maybe through a bunch of your trades and just to see, am I doing this mistake in some of my trades? If there is a commonality of this mistake, then just to practice, not entering. I also would be asking, like, why am I entering right here? Not just, from the point of the structure, but, from also kind of like a psychological point of view as to what pulls me in at that point. Is this kind of fear of missing out if the price is going to break out? But why am I not entering, let's say, somewhere here or here or here? So that's a very interesting question, especially for somebody who is a little bit more advanced, right? Not the beginner. The beginner should concentrate more on the structural concepts. Here specifically, as Franz said, sign of strength and backup action. And then more intermediate advanced traders should be concentrating more on the question of why. Why am I entering right there? Okay, well, let's see what Wesley did in his assessment.
And basically, I think he's agreeing. He says stop loss. No, he did. I think if you use a stop loss, you automatically get a yes there. And I changed the vote on that one. And I think at that point, you're pretty much in sync with our observations at 50%.
Yeah. Okay, well, it was a great opportunity and a great lesson, Wesley. Keep on grinding, keep on learning, and just a really good analysis. Keep doing that. And for everybody out there who is watching this series with Franz and John, this is not just to watch. This is to do. So, get yourself ready, collect your trades, and start doing this very simplistic post analysis. We did not overcomplicate this. This was intentional. This was supposed to do an easy visual task that you could do literally within 10 to 15 minutes. Franz, final thoughts?
Great observations, Ramon. And yes, post-trade analysis is an absolutely essential part of our trading process, because it's where we find out what are we doing significantly that's good in terms of our trading, that's beneficial, and what are our significant and repeatable mistakes that we keep making, so that we can correct them. And that's what it's all about. It's getting better and becoming the elite traders that we all aspire to become. So with that, thanks, Roman. Thanks for your cameo appearance. It's great to have you back with Anatomy of a Trade. And thanks, everybody, for tuning in.